What's going on, guys? It's GBP baby. Welcome back to another video. I hope everybody's doing well, and yeah, let's get straight into things. So you can see we've had a very expansive day on the daily. We got a Thursday reversal kind of, which is what we anticipated. We didn't trade anywhere near the low that I was expecting to get taken in terms of Wednesday. We actually stayed quite in a high premium off Wednesday's wick and then managed to expand on higher, which is not a problem. So you can see we traded up, we wicked through this gap right here, and you can see how we've now closed below it as well. The fact that we've closed below this gap, I'm now going to be watching this gap in Friday to see if it can continue to provide resistance. And the reason for that is because I wouldn't be surprised if Friday did want to send price back inside of its range again. So if you recall, I was talking about how we have been respecting bearish PD arrays in yesterday's video. For example, this bearish order block right here. The fact that price respected it here didn't surprise us when price traded lower. Now, although we've traded back up into the range of these three candles, the fact that volume is still staying below the order block open right here is still bearish to me. So I know it sounds crazy, especially when you see an expansion the size of Thursday, but nonetheless, I am going to be looking at this gap right here, and as far as I'm concerned, price shouldn't be able to get through it. What we can also look at is the midpoint of this. So what I'm going to do is I'm going to clear the charts just to make things a little bit clearer. I am still going to mark out that weekly fair value gap in the discount because I am convinced that price is eventually going to get down there. And then if we get down to the daily now, we have clear charts. And now I'm looking at this bearish order block, which is the last up close before this expansion lower. And then I'm also looking at this gap right here. And now what I'm going to draw our attention to is going to be the midpoint of this wick. And you'll see that that just happens to line up nicely with the top of this gap as well. So let's get that delineated as consequent encroachment on a daily. And we do have some high impact news tomorrow as well. So although I don't expect us to necessarily take out any more lows, I do believe the low and the high of the week have been made. I do expect us to retrace back inside of Thursday's range. So in terms of that, I'd expect us to create some kind of premium, ideally inside of this inversion fair value gap, so to speak. And then I'd want to see price use that to send it lower back into its range. So let's go down to the 4 hour. And you'll see again this large wick wicking right up into this rejection block level, and then you can see our price is just kind of climbing on upwards. If we look at this large wick as well, we can look at the 50% level and you can see how we're just consolidating around there. Again, once price gets above there, I'll see this as a premium, ideally to send price back into its range. And when that does happen, where am I looking? I'm going to be looking inside of this large gap that we created on the back of the news, and also this breaker that we have. So let's get this 4 hour fair value gap marked out, and I'm looking for price to trade down into this on Friday. And this is all assuming that price stays below this level. If price gets above this level, then and only then would I expect us to start running for this buy side liquidity up here. However, ideally price will find resistance at this level, and that will help send us down into the 4 hour fair value gap. We will drop down to the 1 hour real quick. And you can see how price created that high. Look at how price turned inside of that gap I was talking about. You can see our volume is respecting the top of it, and we've displaced away from it quite nicely. So like I said, we're likely going to continue in a slight consolidation, and then I'd like to think that price can maybe create the high in Friday here, and then I want to see if it breaks down away from that. If that is the case, then I'm happy to look for shorts on the dollar with longs on the pairs with an expectation to run down into this south side liquidity target. The fact that we had this large expansion, there's going to be a lot of retail traders that are going long. So for us to go long now, it would simply be us chasing price, which is another reason it's likely not going to. And also, we've got to remember our overall bias for the week. From the beginning of the week, I was stating I want to see a down close week. So we still want to see lower prices. Although I do believe we made the low, it'll be nice to see if the week can close. You know, I'll show you what I mean. On the weekly, you can see how we've got this large wick. I'd like to think that the week can close, you know, a bit lower than that, just to help with the bearish bias that we do have. So let's go to the 15-minute as well, and you can see that consolidation. Again, relative equal lows below here. We have the fair value gap, and we also technically have a breaker here. Low, high, low, low. So there is reason for price to return back down into this range as well. What's also interesting is that we do have this gap over here. Is this the Sunday opening? No, this is from last week. But nonetheless, there is a gap right here, and if we drag that out, that also lines up with these levels I'm expecting resistance at, and look at how price filled the top of that as well. So again, the fact that we're below it and we've traded outside of it means it should act bearishly. It's as simple as that. Once it gets above it, it should treat it as support. However, the fact that we're below it, if we're trading into it, I'm anticipating it to find resistance, unless of course some kind of sentiment or driver sends it through it. However, for Friday, I doubt they're going to want to do that. So let me just get rid of that, and that's pretty much everything on dollar. And now let's head on to GBP USD. I am going to clear the charts here as well. Now GBP is moving crazy, and the reason for that, I'll show you what I mean. If we look at the daily, you'll see how GBP closed higher, and then if we look at dollar as well, dollar also closed higher. This is not good purely because they're supposed to be inverted to one another, so it is very confusing. But nonetheless, if we're expecting lower prices on dollar, that means that we want to look at GBP for higher prices, which is completely fine. So where specifically are we looking on GBP? Well, we have these relative equal highs above here for buy side on the daily. This is now technically an order block. Why? Because we traded through it on the Thursday. So we can look at the 50% level of that as consequent encroachment, and price shouldn't, mean threshold, and price shouldn't need to get any lower than that. And as we drop down to the lower time frames, we'll be looking around this level to see, okay, are there any PD arrays where price may want to try and create the low before trading on into our highs, which is ideal, assuming that dollar does respect that level and want to trade on lower. So let's now jump into down to the 4 hour, and you'll see that that level, that mean threshold, happens to line up with the opening of this 4 hour bearish order block, which was created today. So we don't need to really draw that. We'll get it marked out anyway. We got a bullish order block on the 4 hour opening, which also lines up with the daily mean threshold. So now we've got two PD arrays on two different time frames. Two PD arrays on two different time frames, which should make it a high probability support level for price. But GBP is moving a bit crazy right now, so you can't really trust too much. There is technically an implied fair value gap down here as well, so that means there's an imbalance in price on the downside delivery here. So even more reason as to why price may want to dip down into here before creating a potential premium. So we may want to see the low. I am looking to see if the low of Friday can be made inside of this, and I do realize that pound does have some high impact news tomorrow, so we can pay close attention to that. Let's go to the 1 hour as well. And you'll see there's a nice swing low here as well, nice fair value gap. And if we look at the fair value gap from this open to this close, the 50% level also happens to line up with that gap, that implied gap I was talking about. So even more reason as to why we want to see price trade down into this range. And then I'm anticipating a reversal to run up into our relative equal highs above here and here for buy side. 15-minute clear consolidation, very ugly, but nonetheless, moving into London, I want to see us trade lower, and then hopefully turn on the dime and run up to our buy side liquidity target. All whilst dollar will trade higher, create the high here, and trade lower into its sell side target. So that's everything on GBP. I hope that all makes sense. We're going to finish up on Euro USD. Now Euro delivered absolutely, has been delivering gorgeously. We didn't run out the Wednesday high, but that's fine because we reached our premium expected target for the week. If you remember in yesterday's video, I was saying Euro's done its work, so I'm happy with Euro. We had clear large displacement to the downside in line with dollar trading higher on the back of the news today. And obviously if we're expecting lower dollar, we do want to see can Euro trade on higher. So let's now go to the daily. There's that weekly fair value gap. Let me see. And you'll see we have actually traded down into this bullish order block. So this candle, these 4 candles, 1, 2, 3, 4, this is all a bullish order block. You look at this as a whole bullish order block. Now, you can see how we traded into the open of that and came off of it. So again, there's not really any reason for price to necessarily get back down into there. Another thing to take note of is the fact that we've now created this gap. I want to see this gap get left open. Why? Because that's a bullish indication of price. So now the very lowest, ideally, I want to see price trade tomorrow to create the low would be the 50% level of this wick. Any lower, I'd be a little bit more cautious. Just because we've traded into a bullish order block and we've came off it. So we should expect it to act as what we call a propulsion block and help send price higher. We have a nice rejection block level right here that price may want to reach for. Let's get that marked out in blue on the daily. We don't need that anymore. And yeah, we're just going to be watching this consequent encroachment. So let's go down to the 4 hour. And there's not really anything there. Let's check out the 1 hour. And we do have this low, which is interesting. And we also have this bullish order block. And you'll see right here, that's where we traded into. So again, when you see bullish order blocks traded to like this, it's it's been mitigated. Price shouldn't need to come back to it again, which is another reason we should be able to find support at the level at which we've delineated right here. Like, price doesn't need to get back down into this again. If it does, it will likely drop right through it, and we're probably way more bearish than I anticipated, and dollar will simply start rallying. But like I said, I'm looking for dollar to try and find resistance at this level. So nonetheless, let's go to the 15-minute, and you'll see that also lines up with 2 down close candles before this up move, which is a bullish order block. And then if we keep dropping down, there should be a fair value gap or some kind of PD array we can look at. For example, a breaker, low, high, lower low. Let's drag that out. Last up close candle. I don't know what that blue level is. Let's get rid of that. Let's get rid of that. But it would be nice to see if the low of euro can be made here. So if euro trades into this at a significant time, for example, right before 8:30, I'd be happy to go long with the expectation to run these relative equal highs above here, because this looks way too smooth. They're not going to leave that open. Or even 3 a.m. So I'm looking very closely to see how euro treats this level specifically, with the expectation to trade higher, assuming dollar does want to respect these levels which I've delineated up here. So it all depends on dollar and how it's going to act in its premium. Let's get this marked out, because this is what we call relative equal highs, which is an easy buy side liquidity target for price. This is also what we call an original consolidation between here and here. If we drag this out, there's actually a diagram I can draw that will explain this better. But I'll do this on the weekend or something, or next week. But basically, original consolidations, we anticipate price to return back above them, depending on, the market bias, generally speaking. A little bit hard to explain, but nonetheless, this is what we call an original consolidation. So we want to see price return back to that, and the fact that there's beautiful relative equal highs above it just makes it a lot more juicy for price. This monthly rejection block has been traded to. Let's grey that out, and then this high we got traded to as well. So let's get rid of that. We don't really need to look at this anymore. And right now, I've only got my eyes set on here. Any lower than that, then we're probably way more bearish. And by then, we'll probably realize that dollar is going to trade on higher. But like I said, ideally, it doesn't. And the reason for that is because we still, although we've had this large expansion, we haven't ran out any significant highs yet. For example, if these highs got ran, it would have been a different story. But the fact that we're staying below them, and I'll show you on the 4 hour to make more sense. The fact that we're still respecting these bearish order blocks, for example, right here, the fact that we're staying below it and volume staying below it is saying to me we're still not necessarily bullish. We're just playing within our range. So we need to take that into consideration and not let that change our bias and our original bias from the beginning of the week. So that's going to be everything, guys. I hope that all makes sense. Don't forget to drop a like, smash subscribe, join the mailing list, join the Discord as well. I'll be back on Sunday with another weekly review, and yeah, peace.